Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. As you can see, I'm back in Florida in the Dragon Capsule, as I call it, with all the screens, etc. Came back to 40 degrees and rain here in Florida. At least if it's going to be this kind of weather, you can have snow up in the mountains. Also, I wanted to let everybody know that I am not feeling well this evening, and decided that I'll power through for as long as I can, because I felt like this is an important time with everything that's going on in the middle of the Fed meeting, all the volatility, etc. So we'll get through as much as we can, but just want everybody to be aware of that first. So welcome to everyone that's live streaming on the various social media platforms. If you saw our SPY update over the weekend, boy, that's been pretty spot on. We'll talk a little bit more about that as we move through the markets, etc. But before we do any of that stuff, if you've seen any of our videos, you know that this is our disclosure disclaimer. It is a requirement. If it is by chance the first time you're seeing it, please take a screenshot of it, read it in detail at your leisure. A couple things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, the way we work the TradeFinder is we'll go through and talk about the market, not just the US market, but other markets. And when we talk about some of the international markets, please don't tune out, because all of the issues that we show are tradable on the US exchanges. So you can find some good patterns in some of the other markets and trade those. We'll go through and look at any closed trade alerts that we may have done for our subscribers. Got a good one to look at for you this evening. And then we'll take a look at our past case study considerations with TradeFinder, and we'll look for any that we can find for this evening. And with whatever time may be left, we'll open it up for some Q&A, which usually amounts to you giving us your favorite symbols, and we take a look at what our indicators may show on that. Hopefully we can get to that, but as I said, I'll go as long as I can. All right, with that, let's go ahead and take a look at the market. And boy, lots happened. We had this big move to the downside, and what we talked about in our SPY update, and if you're watching on YouTube, you can go to our channel, Elliott Options, and take a look at that recording. We talked about how the VIX hadn't had a spike yet, and until there's some sort of a panic spike, I didn't really think the selling was over. That's basically what the gist of the commentary was. Well, that's changed, because this is what it looked like when we made the recording. It's like, okay, it's elevated, but it's not one of those panic kind of spikes like that, where you get into the 40s, etc. So that's a different ball game, and you can see the type of sell-off that we had. Well, on Friday, we actually bought puts for our subscribers on IWM, and then close those out on Monday. Happened to catch it right at the low here, and then added to the XLF, which we have for our subscribers, and we have that as a case study consideration here as well. So I'll talk more about that when we get to it. And so we had that big, massive reversal afterwards yesterday, so timed that awfully well. And then you say we backed off a little bit today, but recovered some pretty significant selling. I was a little surprised at what happened today. We're right in the middle of a two-day Fed meeting, and the Federal Reserve will come out tomorrow. I feel like they're going to back off. They were pretty hawkish in the last commentary, and it's really, you can see what's happened to the markets. And I just think that they're going to pull it back a little bit. I don't think they're going to get off the fact that they need to raise rates and that they're going to withdraw liquidity. But the market was pricing in 4 rate hikes this year still and 4 next year. So I think that's maybe a little bit too aggressive for the number of rate hikes that we're going to have. So I think maybe they get to guiding possibly to 2, maybe 3 rate hikes this year. But we'll see. If they come out and they're just as hawkish, we could go lower from here. And then we'll talk about those levels in just a minute. But we didn't really want to be short going into the Fed meeting because, there's still political stuff going on. And I think that the market to the downside in some ways, perhaps the Federal Reserve is okay with it, but they don't want to collapse the market either. So I just feel like they may be just back off some of the hawkish tone tomorrow when they have their statement, and that could give a little bit more of a rally, because when we look at the 10-day moving average, you can see we're still oversold. So we could still bounce back to the upside here from this oversold position. Now, we had talked about the 2 levels in our SPY recordings of 450, and if that didn't hold, which it didn't even come close to holding, then the next level was 430. And so 430 has held pretty well, but also it's support in an oversold condition. Where do we go from here if this doesn't hold and we get some sort of rhetoric that the market doesn't like tomorrow? I still think there's a possibility that we hit this 400 level and close that gap that we talked about way back in the summertime and fall, when the market was moving to the upside. So 400 is a nice round number. It's not that far away now with what's happened. Perhaps we do hold 430 this time and the market's able to rally and come back. We'll see how it plays out. But I think that 400 level has to be something to watch. And if we were to get there, then I think that would be pretty significant and hold. So, perhaps we just get a little bit of a bounce back after these volatility spikes. And that allows the 10-day moving average to get caught, a rally back up to 450, where I thought might be a little support, really wasn't, but there is some potential resistance there. It's right where the 10-day moving average is. So maybe we get a little bit more of a rally up to 450. That could be a good opportunity to short again. It just depends on what the Federal Reserve says. If they significantly back off the hawkish stance, you could see a pretty good rally out of the market. So I'm not always putting a lot on the Federal Reserve's comments. And, we've been talking, I've called Chairman Powell a fish out of water because of the way he's been flip-flopping around. And there's a lot of people that are criticizing him from saying for so long that inflation was transitory and then backing off and saying, no, we have got to do this, raise rates and withdraw liquidity to battle it. So he can't really back off that now or he lose all credibility. But I wouldn't be surprised to see him just maybe back off a little bit. Bond yields are starting to show that perhaps inflation isn't going to be quite as big of a runaway as we had once feared. So is there inflation? Yes. Is it transitory? I don't think so, but we may have overreacted to the amount of inflation that we're going to get as well, at least by what the bond market is showing us. And I've mentioned numerous times that having a good working knowledge of the bond market is pretty important to be an equities trader, even derivatives with like options. So that gives you an idea of where we are here with the market. And so we'll take a look at some of the other markets, and obviously the Qs have been absolutely just obliterated. We had 380 way back. It seems like that was forever ago, and that was only about a week ago. We were talking about 380, and if 380 didn't hold, then 350 was the next level. And we broke that today. And if we look at the 10-day moving average, again, oversold, perhaps maybe not quite as oversold as the market is, surprisingly. So there could be some more, maybe we get a little bit of a bounce back to the upside. If we don't get right back above 350 quickly, like tomorrow, we could be looking at 320 as a potential next level on the Qs. There's some pretty good support down there, but we are oversold just a bit. And again, depending on what Chairman Powell's comments are tomorrow, we could see a little bit of a relief rally there because it's been beaten up so badly. Looking at the Dow Diamonds, and the Dow's been looking a little bit better than the S&P, and it is here as well. You can see not nearly as oversold. 340 being a major point of support that has held on the Dow, the diamonds. None of the other support levels have held, but this one has on the Dow, at least so far. And you can see all these times that we bounced here off 340. So it is a pretty good level of support. We haven't even closed below it once. So it's not, we've traded below it, but it hasn't closed below it yesterday or today. So with that, perhaps the Dow can be a leader. Wouldn't that be something? And then we talked about the IWM, and if you look at the recording, you'll be able to see that we showed the weekly chart and the importance of 210 being broken. We took advantage of that with a real quick trade Friday and Monday, and then we're watching to see if we get any sort of a bounce back. I would love to see it bounce back and test for 210 again. I think that would be another great short entry, but the 10-day moving average is already below that. We're not that oversold on the IWM, so barring any sort of more dovish comments from the Fed tomorrow, this could continue lower. And as we've talked about, there's really no support here. If we go back to the weekly chart, there's no support until we come all the way down into this 160, 170 range right here, where that gap is. So that seems to be where we're going to go eventually, barring any sort of unexpected change from the Federal Reserve tomorrow. Bitcoin. Well, we nailed this pretty well too. If you took a look at that recording, we talked about how it was trying to hold, we'll spread this out a bit. We were trying to hold 44,000. If we didn't, we were going to 40. And if we couldn't hold 40, it looked like we're going to 32. And we got down to 32,950. So right in this neighborhood of all of this stuff right through here in this 32,000 range. So we got it and we bounced back, and not a whole lot, but bounced back to 36, 37 was trading at today. But it's also oversold. And this really needs to hold in this 32,000 range, 32 to 33, right in all there. May, June, and July, just solid support there. If that doesn't hold, then we're talking about a whole different world with Bitcoin. I mean, we could be talking about 20,000 again with Bitcoin. So that's hard to imagine. It seems like it wants to hold here at 32,000, but those are the technical levels. But we'll see if we can hold here and bounce. Again, if the Federal Reserve is a little bit calmer tomorrow, maybe that takes some of the risk pressures off and Bitcoin is able to bounce. But if you want to know about Bitcoin now, hard to go long till it gets back above 40,000. Really needs to get back above that level of 40,000. Then you can start looking at, because this was stair-stepping its way down. I don't know if you happen to look at a chart of the futures yesterday, but it was pretty interesting how on the rally back to the upside, we had a zigzag, a complex A wave, and then we had a B correction and a C wave extension. Just classic on that rally back, that big rally that happened in the afternoon. A complex A wave with a zigzag. The whole big pattern was just a big zigzag from the bottom to the top. It was great. We've talked about how you can trade futures and currencies and et cetera with Elliott wave. It was just beautiful. Anyway, getting back to Bitcoin. Hard to go long without getting back above 40,000. So we'll see how that plays out over the next couple of trading days. But a break below 32,000 gets kind of spooky as far as Bitcoin goes. If we look at the XJO, the ASX, and we had this triangle that was forming, and I don't know that any of us imagined that kind of a breakout of this triangle, but it was an awfully well formed triangle. We were talking about it last week, how it was forming, and there you go. So an Elliott wave corrective triangle with a breakout. They don't break out any better than that. That's as good as it gets. So massive move to the downside, went right through this support level. Thought that might at least give it a blip, but nothing at 7,200, went right through it down to underneath 7,000. We have some area of support right in here around this 7,000 level right through here. So if we can get back above 7,000, then perhaps we get a bit of an oversold bounce, because look at that. Talk about an oversold market. This is about as good as it gets. or as bad as it gets, however you want to view it. But that's a significant oversold market. So you can almost take a quick stab at going long on the XJO, looking for some sort of a snapback rally. Doesn't always happen, and the danger of doing that is because the volatility is so high. And if it doesn't give you a significant move back to the upside, you can have a move higher and still not make any money because the volatility comes out. So it's a tough one. You'd have to probably want to put a spread on there to balance out the volatility. But anyway, that's a really speculative trade. Just wanted to bring it up because there is such a big gap there between where it's currently trading and the 10-day moving average. Let's see how India's doing. And it wasn't able to hold it. We talked about how it looked like it was rolling over back towards 49. And so all the same stuff, 49 to 47 to 45. And we kind of got down towards that 45 level yesterday, moved back up today. And so it's pretty much broken this chart. I mean, it's really been trying. The Nifty has tried to be a leader globally on the move back to the upside, and just the markets, specifically the Federal Reserve in the U.S. market, has fallen back down with it. And then we have the tension in Russia with Russia and the Ukraine, et cetera. All that stuff's going on. Nobody really knows what's going to happen there. Seems like Putin is pretty serious about it, but I don't know. We've sent a whole bunch of weapons to the Ukraine, but Biden says he's not sending any troops. We'll see. But that's, someone, I believe it was last week, might have been the week before, but maybe last week, was asking about that as far as a gray swan or black swan type of thing. And I still have in the back of my mind some concerns about China and Taiwan. Sometimes it's the first one to do it and then others follow suit. So if Putin does invade Ukraine, I wouldn't put it past China to go after Taiwan. Maybe they won't, but they're talking a game. So all those things could really change the global scope. Right now, we're just focused on the Federal Reserve and tomorrow. The DAX, this has been just as classic of Elliott wave as it gets. I mean, look at this. It's been perfect. We had the wave 5 target that hit here and came down and then relabeled to a wave 3. And now we have a new wave 5. It relabeled to a wave 3 because it meant we were still going to go to the downside. We weren't done going lower yet. And I looked at this. I was going to send this out as an alert to our subscribers. The problem is the spreads were too wide. And so, you can tackle that if you want to, but with as many subscribers as we have, doing it on an individual basis is one thing, but when you do it with, tons of subscribers, it's a whole different ball game. So it just wasn't viable, but it didn't mean that the pattern wasn't good. The pattern was great, and it's done everything it was supposed to do. And we talked about it was likely going to come down here, and it did. And it's got a little bit of a bounce to it too. But Elliott wave has just been all over the DAX. It couldn't have been more classic. So you had the wave 5, it bounced back up, relabeled to a 3. So you had a 50% correction in the wave 4, and then you come down and make a new wave 5, and we're right at a 61.8% correction now. Could we go lower? Yeah, we could go to 100% extension, but it's been so spot on. There's no better example of the power of Elliott wave with a country's market than the DAX. It's been so spot on. Amazing. So let's take a look at gold. A lot of chatter about that, and that was another speculation on the financial networks today. I didn't have much to do but lay around and watch all the chatter on the financial networks, and some commentary with gold and the yield spreads, etc. And yeah, gold has been moving to the upside. I've said numerous times, last week again as well, that I thought we would come up and test this area around 174. We're awfully close. The high today being 173.15, so we got awfully close there. So we're getting about to the point where we'll find out if gold is really going to do something. So we're kind of in the bottom of this range here, but I do think we touch 174. and then we'll see. There was a really good chart showing the difference between gold and yield spreads, and they're starting to diverge a bit, which makes it seem that we could be running towards the end of the movement in gold. And if that's true, then that likely builds to the fact that inflation may not be as bad as we once feared. It's there, it's not transitory, but again, the overreaction. And I've said that I firmly believe the Federal Reserve will go too far in the rate hikes. They'll overreach, but 4 of them still this year, and then 4 next year just seems like a lot. That would be a massive overreach. I just feel like they're going to slow things down and the rhetoric, but I don't know. We'll see. We'll find out tomorrow. Maybe he's going to power ahead with it, and the markets are going to be watching that very closely. Another thing is that what happened this morning surprised me a bit in the market. The rally yesterday didn't. That's why we closed out the IWM puts, because we were so oversold, and a snapback rally made sense. And then I thought we'd kind of just digest it today and tomorrow, waiting on the Federal Reserve. Kind of got a little surprised on the severity of the sell-off this morning, but then they gave it all back, came all the way back. So the Dow was up 200 points at one time in the afternoon. So it rallied all that back again, just like it did yesterday. So where we closed today was kind of what I thought we would do, just kind of bounce around a little bit, digest things from all of the volatility that we had Friday and Monday, and then wait and see what's going to happen tomorrow afternoon. But market had other ideas this morning. But anyway, where everything wound up was great. So there's gold. And we'll see if it does touch 174, and can it go any higher than that? We'll see, but I'm not sure. And then we talked about all the metals in the update. We talked about copper, and so I thought I would go ahead and show you a chart of copper too. I thought you might find this interesting with what's happened with copper. Trying to get above that 450 level. And if it can, then we could be off to the races. It's struggling right there. So we had that doji and came back down, and we asked, or I asked the question of whether or not you thought copper was still, because at one time it was really viewed as being a great precursor to economic growth, et cetera. Silver's taken a little bit of that because of its use in electronics, et cetera. But with copper, are we going to break back to where copper is leading? Is it going to show some economic growth? It's got to get above that 4.5 level there. And if it can, then that's a pretty good sign economically. And what I opined about in the market update was the fact that if we can have some growth in the economy, we can live with some inflation. It's going to be bad for tech stocks, but there's areas that'll do well, and the market can actually creep higher. But if we have no growth in the inflation, then we have stagflation, and that's a nightmare economically. It's great if you're trading, especially trading options, because there's tons of short-term trades, but it's not a good situation economically. And so I still think that copper's worth keeping an eye on, especially to see if we can get above that 4.5 level, see how that plays out. So those are the things that I wanted to share with you on the markets. Again, for those of you live streaming on social media, welcome. Please go to YouTube, take a look at our SPY update. I think you'd be pretty impressed with how accurate it was with everything that we looked at. All right, so let's look at some of our previous case study considerations. We had Iron Mountain. We talked about this last week, and perhaps you would have already exited this one. Remember that when we do these case study considerations with TradeFinder, we just identify a consideration, and you're on your own from there. The difference between that and our alerts is our alert subscribers. We send out entries, any adjustments and exits, and I'm going to go through and show you that, especially with our new AI time strategy today. But when we take a look at this, I mean, there's a significant move lower there. Had a little bit of a head fake to the upside, but the big move was lower. And I kind of joked last week that, oh, if you were quick to take the calls off here and let the puts run, but I was kidding. That's too dangerous to do that. What normally happens is when you see a break like this, people are quick to take the puts off. They're like, oh, we're breaking to the upside. Let's take the puts off because we can make more money. Well, this is exactly why you don't, because sometimes these breakouts are head fakes and the big move is the opposite direction. So you be very careful that you don't take one leg off until you're profitable in the position. But anyway, the big move was to the downside. Now we're at support. So you're just being greedy if you haven't taken it off yet, if that was one that you followed. So we're going to go ahead and cross that one off the list. That one's done. Now it's nicely profitable move. And then on January 4th, we looked at commercial metals and have been trying to find an entry for our subscribers here. We haven't yet, because we're back below the 50-day moving average. And it needs to hold right here above this area at 34. And look where it closed today. So we closed below it on Friday, but back above it yesterday and closed right on it today. So we're going to need to see back above 34, back above the 10-day moving average. I still think this could be a good place to be moving forward, but those are the things that we're looking at. So it's one you're following. You're encouraged by the fact that we didn't get a follow through to the downside below 34. As long as it can hold 34 and continue higher, we still have some potential move higher. The XLF, we looked at that and we did send that out as an alert to our subscribers. And this is the one I was telling you that at the low yesterday, when we took off our IWM puts, we added calls to this position to DCA a bit. And you can see how we turned and moved back to the upside yesterday and today. So the adjustment is doing extremely well, getting us back into a position where if we do get some sort of a rally, I think this takes off back to the upside. I think it flies higher, perhaps just reverses this vertical move lower. We're a little bit oversold, not that significant. Again, it's going to kind of well on what the Federal Reserve does, but our adjustment has already been really good. And then we take a look at this from last week, and we did send this one out to our subscribers as well. And you can see what's happened there. Really nice breakout. This is up 19%, I believe, just in a short period of time. So that looks awfully good as well. So let's take a look at one of our alerts. And this is from our time strategy. You can see it ended up being a loss, but just a little one. This is the beauty of this time strategy. So when we take a look at this, and this is so reminiscent, if you saw the presentation on the time strategy, I made a joke about a drug, Elon, that one of my clients had a portfolio of all drug stocks because she was a nurse. And that's kind of one of the trades that did really well on this trade. She just called me because she was complaining because almost this exact same thing happened where the phase 3 trials came out. You can see where it was trading all based on one drug. Phase 3 trials came out. They were disappointing. Stock takes a huge drop to the downside. And it's exactly what happened in the Elon trade. And the Elon trade worked out really, really well. And on our website, periodically, I'll post comments. And so if I talk about one of our alerts in the commentary section, it gets tagged to the alert. So you can get some additional description information there, talking about the earnings report. You can see the volatility spike, et cetera. Those things, it's always nice to have a little extra commentary. So then what we did is at expiration of the short put, we bought the short put back before the close, and we just kept the long put as looking at the stock really feel like it's probably going down to 5, but it was already so far in the money and it moved lower today. It actually bounced up to 7, and at 7 people slammed it down. So some sellers came in, but it does seem like they're trying to support it here around 6 or so. It's bounced off of that level a couple times. So we got back down there again. And so this time I didn't want to let it, because it's so far in the money that if you do get any sort of a bounce and the market does maybe come back and draw it up with it, perhaps some of the people that bought it way back, institutions at 5, might come in and support it. Who knows? It may still drift down to 5. But at this point, we held the put thinking it was going to continue down. It did. So that's kind of one of the adjustment things. We won't do that a whole lot. That's not really one of the designs of it, but in this case, it made sense because what's behind it? The one drug that the entire company is built on doesn't work. There's nothing there unless they announce something new in the pipeline. They've got an earnings report coming up in a few weeks. And so with all that, it just made sense. Let's go ahead and close it out, even though it's still a small loss. But, you know, if the gains are 38% and the losses are 7, we're doing well. And that's been the history of this AI-based strategy. So I just thought I would show you both sides, because last week we looked at the 38% gainer in 16 days, and this one only a 7% loss, but it also gives you a little bit of an idea of the protection that that long put provides. So even though the stock continued to drift down, it worked out extremely well. And I thought you might find that interesting to go through and see. All right, so let's go ahead and see if we can find a case study consideration for tonight. I feel my voice is struggling a bit here, but I'll hang in there as long as I can. But let's at least find a case study consideration, and perhaps I can get a few questions in too. I don't know if I look as bad as I feel, but I sure don't feel very good. So if we take a look, there's one impulse. Holy cow. Travelers. Okay, that makes sense. And insurance. So that's one of the areas that does well, because why? Interest rates are going up. And how do insurance companies, where do they invest? They invest in fixed income. So if interest rates start to go up, it helps insurance companies. So that's why you're seeing a pretty nice move to the upside here. That actually looks pretty darn good. See what the Elliott wave pattern, it's a wave 3. Let's look at the DMI. I'm not sure I'm too excited about that positive directional indicator moving down with it moving up, and that big old doji that we have today. Let's see what the options look like on this. Travelers TRV. I do think there's a good chance it continues higher though. Just not too sure about that doji today. Yeah, there's no problem. There's not, the spreads aren't wide, tons of them. February, March, April, June. It's great. So that is an area of the market that could do well. You've heard me talk about this before. I don't mind the positive directional indicator moving down as much if the negative is still going down as well, because that means there's a lack of buyers. It doesn't mean the sellers are stepping in. It's worse when the positive's coming down and the negative is going up, because then that means the sellers are stepping back in. But if they're not, and it's just a buyer strike, then that's a whole different story. And the ADX is confirming this move, and we're breaking and holding above 165. I think I would want to see what happens in the morning. So I'm going to put a little question mark on this one as far as, does that doji mean anything? Maybe it doesn't, but would want to see how the morning trade plays out. If you could get an entry back down towards the 165 area and close at 168, that would be great. Like today, I want to trade it down there. That would have been a good entry, because I do think 175, 176 looks like it could very well happen. Look at this turn in the money flow. That looks really good. So yeah, I like this one. Again, I would just say, and then we're staying in the upper threshold there between 1 and 2. That's really good. So I would just caution on the open with this doji. Make sure we don't break below 165. It needs to stay above 165. And if so, that looks really good to the upside. So I'm going to make a note on this for today of staying above 165, and just, giving that doji a quick look in the morning, if above 165. All right, so we'll see if we can find, I don't think we're going to find any good, and that's, you can see what's happened. Remember last week, and I said, oh, we're back up to 100 in our consolidating stock list. So those are consolidating patterns. Well, we blew that out with all the volatility, didn't we? So we're all the way back down to 25. I'd be surprised if we find anything here that is worth even looking at. There's none that are in a wave 3. They're probably going to be all just ones that you wouldn't even want to trade. There's nothing in a bearish move either. Let's see. Dick's Sporting Goods. That one sometimes can be a mover. And maybe I spoke too soon here. From 100 to 120, and tons of support there right at that level of 100, and we've got resistance here at 120. You can see the ascending triangle on the move from 100 to 120. ADX is pretty low, so a 20-point move, that's enough. Remember, we were looking for 10%, so 10% of 120 would be 12. So that one will work. Dick's Sporting Goods has traded that one with strangles in the past years. You can see it moves around quite a bit. A little bit surprised. Let's see the problem is the volatility is so high. The options might be ridiculously priced. That's going to be the issue. With the VIX above 30, it almost precludes you from doing these at this point in time. And that's about the level where you kind of have to say, all right, this is the one area where maybe we back off of the strangles just a little bit, is VIX above 30. 20 to 25, that's okay, but above 30, now we're starting to get some pricing in the options. And well, they don't look horrible. Where are we trading at 120? Wow. See, when we start to get out of money, then we get these wide spreads. So frustrating. Yeah, I think we'd have to probably pass on that one. Even though I think it'll probably break out, I doubt we're going to get any sort of potential gain out of that. But we can start looking again once we get VIX back down around 25 or so and see where they go from there. So we'll just leave the travelers on there like that because it has a financial air to it with the fixed income market. You all know what interest rates are doing, et cetera. So I think that makes a lot of sense. That trade, especially if the market calms down a little bit, but you can see it didn't really get affected by the type of selling that we have. Kevin's saying happy Australia Day. I meant to say that in the beginning, Kev. Happy Australia Day to you and all of our friends down under. I guess I did bring the cold back with me, Paul. I mean, I was a bit surprised. And believe it or not, it's almost as cold here, or almost as cold as it was when I left the mountains. It's really odd. And we have this storm system that's coming across. So not only is it cooler, it's rainy. Not sure what happened. It seems like we lost connection with this screen. Let me see if I can get it back. All right, everybody seeing the screen okay now? I think that was a
good to go.
Zoom blip there. Vince, thanks for the comments. Yeah, feeling really rough today. But I don't get sick very often. It almost never happens, and I don't like it. But looking for some beaten down quality stocks. I think we're getting pretty close to that. I really do, Vince. I think like if you were looking for some collars, again, we're going to start talking about our high value portfolio here in soon. If we're looking for some beaten down stocks, look what's happened to the dividend. So if you get a good quality stock that pays a decent dividend, now that the prices come down, the dividend percentage goes up. So yeah, I think you could start doing some shopping for some of these stocks that have been really crushed, like Microsoft. We'll see if it. I didn't see it after they gave guidance, but on their earnings report, Microsoft tanked. And so it was down another 12 points. So you look at where it was just 2 weeks ago, was it 340? And you can see right here around this 280 level of support. And if it breaks that, which it might tomorrow, again, I don't know what happened when they gave their guidance. People were waiting for that. So it could have recovered some, but we'll see if it trades lower again tomorrow. But, you know, you buy some Microsoft and put it away. Our friend Pankaj is looking for leaps. There's one for you. Pankaj, buy some leap calls on Microsoft and forget about it. I think they're going to do well with whatever goes on the rest of the year. But yeah, that's a pretty significant move, and they beat their numbers. They had a good earnings report, but is this the kind of market that we're in right now? Again, unless let me see if I can see what happened in after hours. I don't know what time they came out with guidance. Yeah, it did recover, so they must have upped their guidance. So yeah, all that sell-off that occurred initially on the numbers was recovered. So their guidance, they must have guided higher. It's going to be back up near. It's at 292 now. So if it stays there, all that selling that I was telling you about, it was going to be down here around 270. It hit 269. So that would have been a great deal. Anything above 280, I think, right around 280 or slightly higher would have been great. So it looks like it's gonna be around 290, and it opens. But so I mean, still good company, but not as attractive as it would have been down at 269. Taiwan Semiconductor. Yeah, I think I would cover those puts now. I think you got a gift today with the move back to the downside today. I would have thought that bounce off 120. I think that's the level we talked about, wasn't it? As some pretty good support there. There was some at 125 too, but 120 was where all this congestion is, and to get back down to 122, I think, I think it's probably a good time to go ahead and. The caveat there is you don't know what happens with China. That could change everything. But as far as the general market is concerned, if the Federal Reserve does come out and says that they're going to calm things down just a little bit, then we could see a bounce in that one as well. I'm not sure what's happening with all right, hopefully we got the screen back again now. Good job on the XJO, Kev. We did that. Carrie wants to look at Tesla. And that we talked about the triangle there, that would be an expensive one. We talked about that last week, and it's breaking to the downside. So let's go back to where we were last week. So right there, that was a really nice looking triangle, and we were at 1,030, and now we're at 918. So there's better than 100-point move for you right there. And that's what you're looking for. You already got the move. In fact, on the low yesterday, you'd have been down at 850. That's a heck of a breakout. We said it. We talked about it. We said it would be a great strangle. It'd be an expensive one, but it would be a great one because that's a well-formed pattern. And boy, it sure did. It worked out exactly as you would expect. Right now, it's a tiny bit oversold, but not a whole lot. Perhaps we rally back to 1,000. They're getting an awful lot of competition now. Tesla is, and some of these other electric car makers are coming out with some pretty cool cars, et cetera. So I don't know. I don't know how much longer it can continue to hold these unbelievable valuations. But if it gets back to 1,000, that could actually be a pretty good short. Gunter, are you still in MRO? Well, you looked at that one before, and I think that's been a good one for you, hasn't it? Yeah, look at that move today. I don't think it's done yet either. I mean, I do think So it hit the wave 5, we had a nice move, bounce back. This is it exactly what it's supposed to do. So it hit the wave 5 target, came back, tested the previous wave 3 right back up there. And we're getting a bullish cross back. And so maybe the ADX turns, and if we can break this, potentially that relabels to a 3. But with all the stuff that's going on globally, I don't think oil's hit its peak yet. I think you could get some more out of this, but that was one heck of a move today. And then you're right back at that target. But I think I would want to give it a little bit more time and see if it can't continue to move a little higher from here. Well, BRT also staying in oil, and see what we have here. Another one. Yeah, it's just DJ Khaled of stocks here. The expanding triangles is, I don't know what to say about it other than I look at triangles as much as anybody on the planet, in this last year or so I'm blown away with how many of them there are. They're usually more rare, but that's a nice one right there. So something's going to happen with that one. You would think with Marathon and what oil's doing that's going to be an upside breakout, and you've got a gap up here that needs to be filled. So you could very well break to the upside there. You had these two, the positive directional indicator and the negative kiss together and then spread back apart. You could get that ADX to turn back up on this move. If you want to be a little more conservative, let it break above 13. But then I think you could go up and close that gap at 15. George, if you go on our YouTube channel, you'll be able to see, we did a whole presentation on the new AI strategy. If you're interested in it, you can watch an entire video presentation of it. I think you'll find it really, really amazing. I think we're on the cutting edge of where the future of technical analysis is going. Having AI infused into trading, I think is great. Howard wants to look at the dollar, so let's take a look at the dollar. I think the dollar is stabilized a bit. We looked at it today, though. Yeah, see, we had broken out of that area, and we said that 96 was going to be resistance now because we built this whole area of sideways consolidation, which I thought was really helpful on this wave 3. That was a healthy consolidation, but then it broke down to the wave 4. So now we're back to 96 being resistance. And so we need to break up to 97. If we break to 97, then I think the dollar goes to 100. We talked about that way back in November. I thought we would eventually get awfully near 100. But we're going to have to get through 96 first, and we may need to go sideways here a little bit. And, you know, if the Fed does come out and they're slightly more dovish, maybe that slows this dollar move down a little bit. But if we can get back above, just call it 96 and a half, get back above there, get in the area of 97, I think we run there. And I think we could go. The geopolitical events, that's a good point. That could help drive it as well, especially if some of these countries aren't just blowing smoke and they actually do something. Money will flood into it then. CRM, and that's, you know, pretty ugly. It's another one of the high flyers. It's in an area where it could hold right around 220. See how oversold it is. 200. This is in an area where it should hold. So if I was short, I think I would be looking to take this off, because right in this area right here is a lot of support. And then I would wait and see if it breaks 200. If it breaks down below 200, now you're back in business, because it could go to 140 if it breaks that, but it's going to try to hold right in here. So it's got some support right in this area, right at the low yesterday. It'll try to hold that. So if I was short, I would take the short off and see if it breaks 200, and then I would re-enter the short position. I don't know that I would go long, though, because that's just a ugly broken chart. I think it may do something like this. just with some churning here to the sideways in and around 220, maybe a little bit above. We might as well look at USO. June, we've been looking at some of the oil things. Woo, if you knew how bad I felt, holy cow. So looking at this move here, nice wave 3 moving to the upside, 10-day moving average closing up above the previous wave 1. I don't see anything stopping oil. I think we're going to go hit this wave 5 target. If anything was concerning, is we're getting a little too separated between the 10-day and the 50-day moving average. So maybe it goes through a little bit of consolidation first before it turns and goes higher. The DMI looks good. Positive directional indicator moving back up. I mean, to me, it looks like it wants to make another run after that test, and it could go. It could even hit the wave 5 first, but see this separation here? This works the same way as when a stock gets too far away from the 10-day moving average. Say it with me. You've heard me say it a million times. No security, golly, no security in any time frame gets very far away from the 10-day moving average. It just doesn't happen. And so the same thing happens when you're dealing with the 10-day and the 50-day. When that's occurring, then we're starting to get overbought as well. So looking at that, we'll see that we'll see if we get any sort of consolidation first, but just something to watch for in the not too distant future. See what happened here when we got a little separated there from the 10-day and the 50-day, and then what happened and came back together. Yeah, it's the same thing that happens with stocks and the 10-day moving average. So that's the only negative that I see along those lines as far as stopping oil from going higher. Nike. Was it last week or 2 weeks ago that we looked at Nike? It's been a while. Let me take some of these off here. So did we talk about 145? Because it sure is an area of support there. And we hit it on the high of the day, the 10-day moving average. If we can't stay above 145, then we're probably going to come down and fill this gap at 135. But it's trying. So it got back above 145 yesterday, closed right on it today. We closed below it on the 20th, but no follow-through day. It managed to close us a little bit higher. It's trying hard to hold 145. We do have this gap, so perhaps if we do get some sort of a bounce rally out of the markets and we could go back up and close that gap at 155, from there it'd be hard to figure out what's going to happen. The best case scenario is that we retrace this triangle here. At some point, it's going to do that. Remember that stocks, when they break out of these triangles, the breakout gets retraced, but you don't know when. Sometimes it's immediate and sometimes it takes some time, but that could happen. So maybe you could get even more of a bounce than this gap getting closed here if the market calms down a bit. So it's trying really hard to hold 145. We'll see if it's able to do it. Yeah, David, on the time strategy trades, the AI guys won't give us the intellectual property, even though we started it with some of my search parameters. But of course, I mean, they took it and put it on steroids and ran with it and added over 300 data points. It's their way of controlling it because they don't want everybody on the planet doing it. Because we want volatility skews, et cetera, because those are nice little extra things to have. So yeah, we get the signals from them and then we send them out to our subscribers, and that's how it works. And we couldn't give it to you if we wanted to, because I don't have it. They're keeping it. That's just the way it is. All right, we'll finish up with XOM and NVIDIA. ExxonMobil, I'm curious about this one too. Wow, just to see it bounce back today after that vertical move. You know, I don't like these vertical moves because what goes straight up can come straight back down. Perhaps this is an exception to the rule because, again, how is it with what's going on with oil, the chart oil, global stuff, and I don't see how that retraces back down to 65, but that's the potential on the way down. But it's in a nice wave 3. And if we look at the DMI, elevated, but not above 40. and the positive directional indicator is going back up. It sure looks like that wants to go up and hit 82. I think that looks like it wants to continue again, though. This is the one thing we got to keep an eye on oil. The separations of the 10-day and the 50-day. It's starting to get a little wide. That's the one concerning thing. The rest of it looks good, but just to keep you on your toes, there's always got to be something that we have to pay attention to. So NVIDIA, of course, it's happened here. If you've been watching in the tickers at all, you see it seems like every day is going by lower. Here's another one where you could start to look. Was Vince that was asking about starting to look at cherry picking some stocks that have been hit hard. Well, here's one for you right here. Look at this in this area here between 200 and 220. When you look at this, so Microsoft, NVIDIA, these stocks have been crushed. And it doesn't mean they're going to turn around and run back up to 320. But if you did something like a collar or something along those lines where maybe with the VIX at 30, you actually could catch a little premium on the call that you sold, and you don't have to go at the money on the put because the stock's been beaten up. You can kind of go a little bit out of the money on the put and sell a call and probably bring in a credit on it. And then that would be the worst you could do is keep that credit, providing that it doesn't tank below, say, you could even go down to 180, I would think here. Supports at 200 and then 180. You could even look at that on a put and get some sort of a bounce. But these are some of the ones that you can start looking at things like that. Perhaps we do go down and hit 180, but it's hard to imagine it going below that. And there's just all kinds of support all the way down. So 180 got support, 160 has support. There's tons of it there. If you could get 200, I think that would be a gift. Traded below yesterday, it couldn't close below it, or today, and we're still a tiny bit oversold. But if the selling comes back tomorrow, depending on what the Fed says, and you could get that around 200, that would look pretty darn interesting. So, hey, able to make it an hour. I didn't think that was going to happen at the beginning. So thanks for hanging there with me. Apologize for the raspy voice. But for everybody watching, thanks. Say this every time that your time is the most valuable thing we all have, and we very much appreciate it when you devote some of your valuable time to us, and we in turn try to make the use of that time as informative and educational as possible. Hope you found that tonight, and have a wonderful week. We'll see what happens tomorrow with the Federal Reserve announcement, but I think you're going to see some movement at 2 o'clock, regardless of which direction it is. So have a great day.